Welcome to Wall Street Confidential on TheStreet.com TV. I'm Farnoosh Torabi. The Fed's been on hold for about a year now, and today the story is expected to continue with the expectation that the FOMC will maintain the Fed funds rate at 5.25%. But what is on the Fed's mind, and what's going to be in that accompanying statement? For insight, we have Liz Rappaport, markets columnist at TheStreet.com. Hi, Liz.
Hi, Farnoosh.
So over the past year, the definition of inflation has changed, arguably. What is the Fed's mindset right now in terms of inflation? I mean, how are they characterizing it?
Basically, they've left the word elevated next to inflation in their statements that accompany the end of the FOMC meetings. A lot of investors are expecting the Fed may take out that word to characterize inflation right now because their core PCE, the core personal consumption expenditures index, which excludes food and energy prices, has come down to 2% year over year. It's expected to come in at 1.9 on Friday. So that's within their comfort zone. So they're expecting to see Bernanke, who's been known to kind of herald the idea of strict inflation targeting, say this was the top end of the range and now we're within it, so I'm going to move to kind of neutral on inflation. So I think the market is expecting a dovish bent today.
And when you take into account factors like housing, which has been suffering for some time now, and you put that next to such as like, manufacturing and inventories, which have been rising, how is the Fed assessing the economy right now? Inflation aside, how is the economy doing in the Fed's view?
The Fed has been presenting a very sanguine picture of the economy for even throughout the 3 quarters of a slowdown that we've had so far. Economists believe that the second quarter growth GDP is running at 3 to 4%, which is trend or slightly above trend, and that is because of this pickup back in manufacturing, less of a drag from housing potentially, help from exports and trade. So I think that the Fed is pretty optimistic about economic growth. They're still concerned about housing. They've watched interest rates go up. I think they want to be vigilant to see that the consumer doesn't struggle too much with mortgage resets and higher interest rates on other debt. But yeah, they're upbeat about the economy.
Well, back to that word elevated, because it is probably the word that's going to be looked at today. If they take it out, what do you think? A rally, and then if they keep it back in there, we could see a sell-off in treasuries? Well, what's the outcome?
I think that, if they take out elevated, they may also ratchet up their view on the economy. They may, note that growth is expected to be stronger in the second quarter. If they do that, I think that the market will be really pleased. That's the Goldilocks scenario.
Right.
If they leave elevated in, I think that the market will take that as the Fed is thinking about shifting its view not just from core inflation, but to energy and food inflation, overall headline inflation they call it, which includes energy and food, and those prices have been rising throughout the year as core inflation has been falling. And that would get a bond market sell-off going potentially, even higher rates. Like if we're suddenly watching a different measure of inflation that's actually escalating, then, the markets will have to adjust to that. Could be a blockbuster event. Could be a blockbuster event of the week.
We wouldn't even expect it. Yeah.
Exactly.
So the Fed's announcement is expected for 2:15 p.m. Eastern Time. We will bring you those results, of course, as news develops, and we'll have Liz on hand in case anything tragic or blockbuster-ish happens. Thanks so much, Liz Rappaport.
Thanks, Farnoosh.
Markets columnist for TheStreet.com. You're watching Wall Street Confidential on TheStreet.com TV. Stay with us.